Silicon Valley loves to sell a familiar story: garage startups, venture capital miracles, and a handful of names that changed everything. But that version is incomplete. While the spotlight stayed on the usual tech giants, a parallel rise was happening quietly in the background. Black entrepreneurs were building software empires, investment firms, and digital platforms, generating billions in value, often without mainstream attention. In this video, we uncover the 7 most powerful Black-owned tech empires that reshaped parts of Silicon Valley from the shadows. No hype, no noise, just execution, timing, and overlooked opportunity. Number 7, Paul Judge. Silicon Valley often rewards visibility. The loudest founders, the biggest funding rounds, the most viral startups. But Paul Judge didn't build his influence that way. He built it in one of the most invisible yet most powerful sectors in tech: cybersecurity. While most people were chasing consumer apps and social media attention, Judge was focused on something far more critical: protecting the digital infrastructure those apps depend on. And in Silicon Valley, that's where real power quietly accumulates. Before most people even knew his name, he was already building and scaling cybersecurity companies that would eventually become attractive acquisition targets for major players in the tech industry, not because they were flashy, but because they solved problems every major company needed fixed. What makes his story different is not just that he built companies, it's what kind of companies he built. In Silicon Valley, attention goes to products people use, but wealth often comes from the systems those products rely on. And Judge positioned himself exactly there, behind the scenes, inside the architecture of digital security. Each venture he touched followed a similar pattern: identify a vulnerability in the system, build a solution that enterprise clients couldn't ignore, scale it quietly, and position it for strategic acquisition. No hype cycles, no public spectacle, just precision execution in a space where failure is not an option. And that strategy matters more than most people realize. Because cybersecurity isn't just another tech niche, it's the foundation of modern digital power. Every bank, every government system, every major platform depends on it. So while Silicon Valley tells stories of visible billionaires and consumer-facing giants, Paul Judge represents a different kind of success, one built in silence, inside the systems that hold the entire tech ecosystem together. And he is just the beginning, because the next empire isn't just about technology, it's about control at scale. Number 6, Tristan Walker. Silicon Valley has an obsession with innovation, but sometimes the biggest opportunities in tech are not about invention at all. They are about attention, what the industry chooses to see, and more importantly, what it ignores. And for years, one massive market was largely overlooked, not because it wasn't valuable, but because it wasn't prioritized. Tristan Walker built his entire empire around that gap. Before Walker became known as a founder, he was operating inside the very system he would later challenge. He spent time in Silicon Valley environments where the default assumption was that the most profitable consumer products were already being built for mainstream audiences. Everything else was considered niche. But Walker saw something different. He saw that the niche wasn't small, it was simply ignored. And that misunderstanding created one of the most important opportunities in modern consumer tech. He founded Tristan Walker and launched Walker & Company brands with a very specific idea: build products for people Silicon Valley had historically underserved, especially in personal care and grooming. On the surface, that might not sound like Silicon Valley disruption, but that's exactly why it worked. Because While most tech startups were competing in crowded digital spaces, apps, platforms, and software tools, Walker was applying Silicon Valley thinking to a physical consumer problem that had been ignored for decades. The logic was simple, but powerful. If major industries were not designing with certain users in mind, then the opportunity wasn't to ask for inclusion. It was to build directly for them. And that shift in thinking is what changed everything. Instead of trying to compete in already saturated tech categories, Walker focused on building a brand that combined technology, design, and consumer insight into a single system. It wasn't just about selling products. It was about building an ecosystem that understood its users more deeply than traditional competitors ever had. That approach created something Silicon Valley often struggles with: cultural relevance tied to product utility. And when that combination works, it scales fast. The impact became undeniable when his company gained major traction and eventually attracted acquisition interest from larger consumer giants. But the deeper story wasn't just the exit, it was what the exit represented. It showed that markets labeled as overlooked were actually undervalued. And once that realization hits, it changes how you view the entire tech landscape. Because Walker's success wasn't built on discovering new technology. It was built on reframing existing demand. Silicon Valley had the tools, the infrastructure, the capital. What it lacked in this case was perspective, and Walker filled that gap. But his story also reveals something deeper about how power works in tech. Because while infrastructure builders like Paul Judge operate behind the systems, founders like Walker operate in plain sight, but in spaces the mainstream industry refuses to fully acknowledge until the profits become undeniable. That delay between insight and recognition is where wealth is often created. First comes the idea, then comes resistance. And finally, once the numbers speak loudly enough, comes validation. Walker's journey sits exactly in that pattern. But as significant as this market disruption was, it was still only one part of a larger picture. Because while Walker was proving that overlooked markets could become powerful businesses, another founder was about to demonstrate something even more aggressive: that you don't need Silicon Valley validation at all to build a billion-dollar software company. And that changes the entire conversation. Number 5, Tope Awotona, the bootstrap billion-dollar shock. Silicon Valley has a favorite storyline: raise funding, scale fast, dominate markets. But that story leaves out something uncomfortable. Some of the most successful software companies were never built inside that system at all. They were built outside it. And Tope Awotona's story is one of the clearest examples of that reality. Before he became known for building one of the most widely used scheduling platforms in the world, Tope Awotona was not backed by elite venture capital firms. He wasn't handed early credibility, and he wasn't operating with Silicon Valley safety nets. In fact, the beginning of his journey looks almost the opposite of what the tech industry usually celebrates. He had the idea for a simple but powerful tool, something that would remove the friction of scheduling meetings, a problem almost everyone in business quietly struggled with. But instead of being seen as revolutionary at the time, it was treated like a small efficiency problem, not something worth major attention. That is where most founders would have struggled to continue. But Awotona made a different decision. He didn't wait for validation. He built anyway. And that decision created one of the most important advantages in modern tech: time in the market before competition even realized the opportunity existed. While other startups were chasing funding rounds and investor approval, he was focused on product refinement, user experience, and organic adoption. Every improvement was guided by real usage, not boardroom expectations. And that difference matters more than it looks on the surface, because in Silicon Valley, funding often determines speed. But in Awotona's case, discipline determined survival. He reinvested, iterated, and scaled without relying on the traditional venture capital narrative that defines so many tech success stories. And over time, the product started doing something most tools fail to achieve. It became unavoidable. People didn't just use it, they depended on it. That shift from convenience to necessity is where software becomes power. As Calendly grew, it didn't need aggressive marketing campaigns or loud positioning. It spread through behavior. One user would introduce it to another, then another, until it quietly embedded itself into the daily operations of businesses across industries. And that kind of growth is difficult to replicate because it doesn't rely on hype, it relies on utility. Eventually, the scale became impossible to ignore. What started as a simple idea to fix scheduling friction evolved into a platform used across global organizations, turning into a multi-billion-dollar company without following the typical Silicon Valley script. That is what makes Awotona's story so important in this larger narrative, because it challenges a core assumption in tech culture that you need permission to build something massive. He proved the opposite. That execution can outperform access. That discipline can outperform funding. And that simplicity, when scaled correctly, can outperform complexity. But even more importantly, his success forces a question that Silicon Valley doesn't like to answer. How many other small ideas have been overlooked simply because they didn't look like billion-dollar companies at first? And that question leads directly into the next story, because while Awotona built a global platform without permission, the next entrepreneur built an empire by quietly dominating an industry most people didn't even realize was worth billions. And that empire was built in the shadows of enterprise technology. Number 4, David Stewart. So many people find it hard to believe that Silicon Valley has visibility problems. It actually does. It celebrates companies that dominate headlines, raise massive funding rounds, and shape internet culture. But some of the most powerful tech empires in America don't operate in that spotlight at all. They operate in silence. And one of the clearest examples of that reality is David Stewart. Before most people ever heard his name, David Stewart was already building something far bigger than a typical startup. He founded Worldwide Technology, a company that didn't chase consumer attention, app downloads, or viral growth. Instead, it focused on something far more essential: the infrastructure that powers enterprise technology itself. And that decision changed everything. Because while Silicon Valley often rewards visibility, enterprise technology rewards reliability. And reliability, when scaled globally, becomes one of the most profitable positions in the entire industry. Worldwide Technology didn't become massive by building products people talk about. It became massive by building systems that large organizations depend on to function. Cloud infrastructure, supply chain solutions, enterprise integration, these are not flashy spaces, but they are critical. Every major corporation eventually hits a point where they need companies like this to keep their operations running smoothly. And Stewart positioned himself directly inside that necessity layer. What makes this story even more striking is how quietly the company grew relative to its scale. It wasn't built through hype cycles or constant media exposure. It expanded through long-term contracts, enterprise trust, and deep integration into Fortune 500 operations. That kind of growth doesn't happen quickly, but once it happens, it becomes extremely difficult to replace. Because when a company is embedded into the operational backbone of major organizations, switching costs become enormous. And that creates a level of stability that most Silicon Valley startups never reach. This is where Stewart's empire becomes difficult to fully appreciate from the outside. Because unlike consumer tech, where success is measured in attention, enterprise tech success is measured in dependency. And worldwide technology became deeply embedded in that dependency layer. Over time, that positioning translated into something rare in the tech world: sustained multi-billion-dollar scale without mainstream recognition. Not because it wasn't important, but because it wasn't visible in the way most tech stories are told. And that is the real shift this story introduces into the video. Because up to this point, we've seen different forms of success: cybersecurity infrastructure, ignored consumer markets, bootstrap SaaS growth. But Stewart's empire represents something even more powerful. A company that doesn't just participate in Silicon Valley, but quietly supports it. And once you understand that level of positioning, the entire definition of a tech empire starts to change. Because the biggest companies are not always the ones people talk about. They are the ones everything else depends on. And that brings us to the final phase of this journey, where we move from hidden infrastructure power to pure capital dominance at the highest level of software investing. Number 3, Robert F. Smith. Building one of the most recognizable products is one of the ways success is defined in Silicon Valley. But the real power in tech doesn't always come from building what people see. It comes from owning what everything else depends on. And Robert F. Smith built his entire empire around that idea. Before becoming one of the most influential figures in private equity, Robert F. Smith focused on something most investors ignored at the time: enterprise software. Not social media, not consumer apps, not hardware innovation, software that runs businesses. Through Vista Equity Partners, he built a strategy that quietly reshaped how Silicon Valley thinks about value. Instead of chasing early stage hype, Vista focused on acquiring, optimizing, and scaling software companies that were already embedded inside critical industries: accounting systems, healthcare platforms, financial infrastructure, enterprise tools that companies cannot operate without. These are not products people casually switch. They are operational lifelines. And that is where the real leverage exists. Because once a software system becomes embedded in business operations, it stops being optional. It becomes structural. And structural systems create long-term, predictable value at scale. That is the foundation of Smith's strategy. But what made it even more powerful was the discipline behind it. While Silicon Valley often rewards speed and disruption, Vista focused on something different: efficiency, consolidation, and long-term control. Buy companies with proven enterprise value, improve their performance, integrate systems, scale profitability, repeat. It sounds simple, but at scale, it becomes one of the most powerful financial engines in the tech ecosystem. Because instead of betting on what might become valuable, Smith's approach focused on what already was. And over time, that strategy positioned him at the center of hundreds of software companies that collectively power large portions of the global economy. This is where his story moves beyond entrepreneurship and into influence. Because when you control the companies that run enterprise systems, you are no longer just participating in Silicon Valley. You are shaping its financial architecture. And that is why his name stands at the top of this list. Not because of hype, but because of leverage. Because in the modern tech world, the greatest power doesn't come from visibility. It comes from ownership of the invisible systems everyone else depends on. And when you step back and look at all five of these stories together, from cybersecurity to ignored markets, to bootstrap software, to hidden infrastructure, to private equity dominance, a pattern starts to emerge. A pattern Silicon Valley rarely talks about. That some of the most powerful tech empires were never built for attention. They were built for control, systems, and long-term dominance. Number 2, Arlan Hamilton. Silicon Valley often tells a story about access. Who gets funded, who gets mentored, who gets into the room where decisions are made. But for decades, that room had very clear limits on who was allowed inside it. And Arlan Hamilton's story begins outside of all of it. Before she became a name in venture capital, Arlan Hamilton was not operating inside the traditional Silicon Valley ecosystem. She wasn't a partner at a major firm. She wasn't backed by institutional wealth. And she wasn't following the standard path the industry expects from investors. In fact, her starting point was the opposite of what Silicon Valley typically recognizes as qualified. But that's exactly what makes her story important in this narrative. Because instead of accepting the barriers of entry, she built a new path entirely. She founded Backstage Capital with a simple but disruptive thesis that founders who were traditionally overlooked, women, people of color, and LGBTQ plus entrepreneurs, were not lacking in talent, but lacking in access. And in Silicon Valley, access is everything. Capital determines visibility. Visibility determines growth. Growth determines survival. So by changing who receives capital, Hamilton was effectively trying to change the entire direction of innovation itself. That is not a small shift. That is structural influence. At the beginning, the idea was not widely embraced. Venture capital is one of the most closed ecosystems in the tech world, built heavily on networks, reputation, and long-standing relationships. Breaking into it without those advantages is extremely difficult. But Hamilton didn't try to fit into the system as it was. She built an alternative version of it. And that decision created something powerful, a competing pipeline of innovation. Instead of waiting for Silicon Valley to expand its definition of investable, she actively funded founders the system was ignoring. Early stage startups that didn't fit traditional expectations suddenly had backing, structure, and momentum. And over time, that begins to reshape outcomes. Because venture capital doesn't just fund companies, it decides which ideas get the chance to exist at scale. That means whoever controls capital controls direction. And Hamilton stepped directly into that layer of control. What makes her role even more significant in this story is that she represents a different kind of power than the founders we've covered so far. Paul Judge built infrastructure. Tristan Walker disrupted markets. Tope Awotona scaled a product globally. David Stewart built hidden enterprise dominance. Robert F. Smith controlled software at the investment level. But Arlan Hamilton represents something slightly different. She represents influence over the pipeline itself. And in Silicon Valley, the pipeline is everything. Because if you control what gets funded, you indirectly control what gets built next. And that creates long-term structural impact far beyond any single company, which is why her story belongs here, not as a traditional founder, but as someone who changed the entry points of the entire system. And now, as we move toward the final chapter of this journey, The focus shifts one last time from funding power to cultural and ecosystem influence. Number one, Morgan Debaun. Some of the ways success is being measured in Silicon Valley is in software, funding rounds, and enterprise scale. But there is another layer of power in the digital economy that doesn't always get the same recognition: attention itself. Because in the modern world, attention is infrastructure. And Morgan Debaun understood that earlier than most. Before becoming a major figure in digital media entrepreneurship, Morgan Debaun was focused on a problem Silicon Valley largely underestimated at the time: the lack of digital platforms built specifically for Black audiences at scale, not just content, but ecosystem level media infrastructure. She founded Blavity Inc. with the idea that culture itself could be built, distributed, and scaled like a tech product. Instead of treating media as something separate from Silicon Valley, she positioned it as part of the same digital economy that powers software, platforms, and online communities. And that shift in thinking is what made the company powerful. Because Blavity wasn't just publishing content, it was building a network, a digital ecosystem where audiences, creators, and brands could interact inside a structured platform designed around a specific cultural identity. In Silicon Valley terms, that is not just media, that is platform thinking. And platform thinking is what creates scale. What makes Debaun's story especially important in this broader narrative is how it challenges the traditional separation between tech companies and media companies. In reality, both operate on the same foundation: attention, engagement, distribution, and monetization. Silicon Valley built the infrastructure, but platforms like Blavity showed how culture moves through it. And once culture moves through technology, it becomes extremely difficult to ignore because it influences what gets built next, what gets funded next, and what gets scaled next. That is subtle power, but it is real power. Over time, Blavity expanded beyond a single media brand into a broader ecosystem of digital platforms, events, and cultural products, showing that media companies can evolve into full-scale tech-driven enterprises when built with the right systems. And that evolution is the key point, because Morgan Debaun didn't just build a media brand. She built a digital infrastructure for culture inside the internet economy. And that brings the entire story full circle. Because when you look at all 7 of these journeys together, a pattern becomes impossible to ignore. Paul Judge built the invisible security layer. Tristan Walker built overlooked consumer markets. Tope Awotona built global software without permission. David Stewart built hidden enterprise dominance. Robert F. Smith controlled software at the investment level. Arlan Hamilton reshaped venture capital access. And Morgan Debaun scaled culture as a digital platform, different paths, different industries, same underlying reality. Power in Silicon Valley doesn't only belong to the most visible names, it belongs to those who understand system, show they are built, how they scale, and how they quietly shape everything around them. And these 7 stories prove something most people never fully see, that some of the biggest shifts in tech didn't happen in the spotlight. They happened in the shadows of the system itself. What you've just seen isn't the version of Silicon Valley that gets talked about the most. No headlines, no hype cycles, just execution, systems, and long-term thinking. From infrastructure to software, from capital to culture, these 7 stories show that real power in tech isn't always visible, but it is always intentional. If you want more breakdowns like this, make sure you subscribe to Black Status and drop a comment on the next empire you want us to uncover.